Hey guys, Dave with Moneyology here. Hope everyone is having a great weekend. Today is November 17th, 2019, and this is the weekend market review where we look at the markets from various different angles and perspectives and time frames. Most of these charts are going to be from a weekly perspective, and we'll cover fixed income markets, equity markets, US domestic, international, emerging markets, and get a better sense of what's taking place in the overall economy. So let's start with uh, the 10-year U.S. Treasury yield, and this is a very important indicator, and we've been we've been very spot on with this indicator, and we're still of the opinion that we're going to see much. I wouldn't say much higher, but certainly we're going to probably hit 2.1 and 2.5, possibly as high as 2.65 on the 10-year Treasury before this rally or this rally is over with. So whereas a lot of folks are saying that this last couple week rally in U.S. Treasuries from 1.5 to 1.9 is sufficient, and that's probably the end of it. No, I think we're going to be moving higher. And the reason for it is there's just some substantial positive divergence right now taking place in this particular space. And yeah, we had a pullback so far this week, down 5% on this indicator. But that's what happens when you hit the 50 RSI level. There's going to be a lot of resistance, coincides with the 26-week moving average here, which is that red line. And so a pullback is healthy, but I think ultimately a move towards 2.1 and these various different levels is likely possible. And then what you're basically setting up here now is, notice this is a shoulder, this is a head, and then likely probably sometime in 2020 is you're going to create another shoulder. And at that point, I think you're setting up for a major decline in interest rates and probably getting to where the 10-year Treasury is towards I would say under 1% even. So I think that there are some great opportunities that will result in these movements, and we'll keep track of them as they occur. Dow Jones 2500 index. This is the index with the 2,500 largest names trading in the U.S. economy and U.S. markets. Notice when we broke out from this level, we were off to the races. We broke above this momentum trend line, and now there's a lot of blue sky ahead. I think we're going to continue hitting new highs over the course of the next several months. I see. Well, you're gonna see short-term pullbacks of a couple percentage points, but the direction is unequivocally higher right now. So there is no reason to be short the markets right now. If you are 100% invested, perhaps taking some insurance when it's very cheap is prudent. But right now, I don't see any signs that the markets are going to be pulling back anytime soon. Here's the copper index. So copper also is struggling right now around that 50 RSI level, right? This has been resistance multiple times, and this is where we really, when we broke down right around here, dropped from 45 to 40 all the way to 39 was around that 50 level. So and certainly when we took off here from 43 all the way to 45 was when we broke above that 50 level. So the 50 level is a very important indicator. Here again is another example. What happened when we fell right around here? Major drop coincided with that 50 RSI level. Now we're struggling right now to break above that level, but I think we eventually will. There are a number of signs, both on the daily as well as the monthly time frame, that suggest that a break to the upside is going to happen. The question is when, and that ultimately is only up to the market to decide. Here are the emerging markets, that ETF. So here's the symmetrical triangle that broke out to the upside after several years, frankly, of consolidation. And while a pullback here is healthy, it can pull back all the way to 41 and still be very healthy. I don't think it's going to get that far, potentially towards these two moving averages around 43, but potentially a pullback towards that 50 RSI level here. But I would use any opportunities, any weakness as an opportunity to add to my position. All right, so gold. So there's someone who I really admire and respect on Twitter who's suggesting that it's very possible that we do something like this. We bounce and we ultimately head towards that 400 level before bouncing. I frankly don't see it. I respect his perspective, and he may be right. I obviously can't foretell the future with any degree of 100% certainty. It looks to me as though we're very, very close to a bottom if we haven't already hit it. I'm of the belief that we have, and that's what you're seeing as many of you watching our premium videos. So many of the top names are already breaking out to new highs, despite this pullback from 1537 to about 1451. So I think the low is probably in, but if we go to 1430, it's not the end of the world and still very much within the bullish time frame, so long as that 50 RSI level holds. High yield junk bond ETF basically trading at all-time highs right now, and that's suggesting to me that there are really no credit concerns in the market. The housing index, we pulled back some as interest rates were really starting to rally, and then when interest rates pulled back this week, now sure enough, housing is inversely correlated to that. I think just the fact that housing is near all-time highs is again another indicator that the markets are in very, very good shape right now. Crude oil. So this is one of the most interesting markets because of its volatility of late. But I've been on the record saying that crude oil is breaking out, and we finally saw it this week. Look at that. We were up about 1% this week, and PPO, another momentum oscillator, has broken above zero. The last time this happened was back in February of 2019. Notice the momentum right here. It's very, very close to breaking out of a downtrend since basically 2017, right? This downtrend started, and we're about to break out. Price has already broken out. So I think crude oil is an area, energy in general, that space is I think going to undergo a pretty substantial upside surge, if you will. NASDAQ. So NASDAQ has broken out to all-time highs over here. Momentum has broken out. And that suggests to me that we are in a new uptrend, multi-month at a minimum uptrend in technology. NASDAQ equal weighted, same thing. This is just an index that's weighted equally with the 100 top names versus one that's perhaps led more so by Facebook, Google's, Apple's of the world. All right, so a couple of ratio charts, the 10-year to the 2-year treasury. This is a lot of folks were talking about right here. We are at 1. So this yield curve technically never inverted, but you go to the Wall Street Journal, you turn on CNBC, Bloomberg, and so on, Fox Business. They were talking about the yield curve. It's predicted the last three recessions, and so when they thought that was going to happen, that was their signal to sell. But I said many times in the past, 3 times does not equal a sample size, large enough sample size. You need 100 at least, and we just don't have those examples from history. So it's a bit silly. But what right now you're seeing, and this is really the first time this has happened since we barely had it back in May of 2019, but this is the first time where the 13-week moving average has crossed above the 26 moving average after closing below it, and it hasn't happened really. I mean, let's scroll back a little bit. This is a time frame since 2017. Let's go look at it from a monthly perspective. So really, I mean, ever since this has been charted, this is not the moving averages have not crossed. So right now, bottom line is what I'm trying to say is that the short-term moving average crossing above the long-term moving average is suggesting we are in a new uptrend in momentum where the 10-year U.S. Treasury is going to be outperforming the 2-year. That's exceptionally bullish for the economy, and not enough credence is being put to this. But I think this is extremely important, perhaps the most important chart in this watch list. If the 2-year yields are close to zero and the 10-year yields are going up, that's suggesting that the equity markets are predicting a much more bullish future over the next 3 to 5 years. So that's a great sign, I think, if you're an equity bull. Here's the junk bond ETF versus the high quality credit. And again, if the junk bonds outperform the high quality credit, that's bullish for the economy. And right now we're above this crucial 50 RSI or momentum level, and now we're back testing that level right now. I think we're going to head much higher in this ratio, and that's a very good sign for the overall economy. Here's another one: the 20-year Treasury against the TIPS, which are an inflation indicator. So if the deflation, the 20-year Treasury, is outperforming the inflation indicator, that's a negative sign for the economy. Conversely, if the inflation indicator is outperforming the the 20-year Treasury, that's a good sign. So bottom line is here, we've been calling for this correction and for quite some time, and it happened. And we said that this level was going to be an area that likely gets hit, and we got very, very close to it. Now we bounced, but I think we're probably going to head lower, possibly as low as about this. I'd say 1.1. Right? There's a lot of resistance here in the past that's going to be serving as support. So I think if we get to that 1.1, 1.11 level, I think it probably coincides with this 38 RSI level. Then you're going to see signs of an increased pullback in the equity markets. But for the time being, as long as the inflation indicator is performing well, I think it will be a bullish sign for the equities. Here's consumer discretionary against consumer staples. Again, discretionary, you want to outperform the staples in a bullish economy. It started to break out above this downtrend since 2018 that was started back here. It's not really outperforming in price quite yet, but momentum has begun doing so. So keep an eye on this indicator. If this breaks down, that would be bearish for equities. If this breaks up, that would be extremely bullish for equities. But a number of signs between this and this suggest that we're likely headed to the upside breakout. Here's the S&P equal weighted index breaking out to 52-week highs, very, very positive. Here's the SPX, the S&P 500. Again, closed the week at 3120, guys. Who would have thought back here when we were hitting 2847 and 2752 that we're going to be at 3120 just a couple of months later? Well, if you had watched my videos, these numbers do not surprise you right now. So, but I think we're headed higher, and the momentum shall continue. The S&P Regional Banking Index, notice it broke out of a bullish flag here to the upside. And while it's pulling back some, as I indicated in May, once you hit that 61 level, I think we're probably going to be headed up something like this, all the way towards that 64 level or close to it. Perhaps the 62 level will serve as strong resistance. Semiconductors, they are one of the strongest sectors right now. I'm watching this level right here, 69, because this is where we broke down last time, right here. So that might serve as some resistance in the near term, but use any pullback opportunities to go along the sector of the market. S&P as the SPYs, again, breaking out to new highs. We're approaching that 69 level, so a pullback in the markets is a possibility. The 69 level, notice, not only is it a crucial Fibonacci area, but when we broke down here, 69 was your first pullback all the way from 274 to 250. When we couldn't break out here, 286 all the way to 237. So some major pullbacks occurred when we were unable to break above the 69 level. Will that happen again here? I don't think so, but a pullback to the 300 level on the SPY is a possibility. Total stock market ETF, VTI, same thing, breaking out, and looks very, very bullish. Here, the Dow Transports, notice that they are also above this downtrend and correcting right now, pulling back 1.72% on the week. But as long as these 13 and 26 week moving averages continue to curl up to the upside, I think this is a sector that will be fine. US dollar, this is the most interesting sector for me right now, or the index that I'm watching most closely. And it's really hard to understand which way it goes. I think it resolves its way to the downside. I think the US dollar is headed lower. However, there's still a number of indicators that are not suggesting that. For one, The 13 is above the 26-week moving average. We're above those two areas in price, and we're above the 50 RSI level. So the dollar still yet to make a clear indication of which way it's going. Here's the developed market ETF VEA. Same thing, breaking out with the moving averages serving as support. It's a great area to go long because I think there's a lot of upside yet. All right, so VIX, the VIX index, I've pointed out that this 12 area has served as support for many, many times. Here, 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 and here. And the question is, does that 38 level of support hold, or do we move lower? The reason why I think we're headed lower, and therefore the markets are higher, and likely the VIX heading all the way to 9 is a possibility, is because momentum today at 42 is lower than when momentum was when the price was similar levels last time around, right? We were higher in momentum. Last time around here, we were higher in momentum. So this is the very definition. Notice here again, this was higher momentum when we were at these levels. This is the very definition of negative divergence, which is when momentum is lower at a similar price point. And that's what we have right now. So I'm suggesting, I'm going on the limb here and suggesting that we're not going to see some real volatility in the markets until the VIX indicator goes all the way down to the 9 level. And that's a lot further to go. And then finally, the 5,000 largest companies in the US breaking out to all-time highs is definitely a bullish indicator. So that's it, guys, for this watch list. But I do want to go through 5 of the highest momentum sectors right now in the market, followed by 5 of the lowest momentum sectors, and see if there are some opportunities that we might find. So first and foremost, we touched on semiconductors. Look at the semiconductors. As soon as we broke this 124 level, we took off, right? And we're close to another upside breakout. They're above the 69 level, which is exceptionally bullish territory. And the semiconductors are a great risk-reward entry right now. Above 135 with a stop loss between 124. I wouldn't be surprised to see semiconductors all the way up to 150. If you start looking at underlying names within this index, you might find even more better opportunities. Silver miners. So even as silver has corrected over the last couple of months, silver miners are very, very strong right now. They're just a couple of percentage points above their 52-week highs right now. They're above the 13 and 26-week moving averages, and we're well above the 50 RSI level, just consolidating below the 61 level. So once this breaks to the upside, you're going to see some tremendous upside. I think all the way to 52 is a strong possibility before this move ends, or at least in the near term. Now, if it breaks below 27, then my narrative is wrong, and you probably want to take some losses there, stop losses, and just get out. But right now, I think the upside breakout is the far greater possibility. Okay, here are a couple of countries that, if you read about them, you think that things are going to hell. On the other hand, their stock market is suggesting completely something different. So 28 right now is a very strong resistance level, right? If you look even closer, 27 right now is serving as resistance. I think we're about to break that to the upside, and Turkey is going to be a great area to be long. So I think a break here is going to send shares immediately towards that 28 level. A break above 28, and guys, we're talking about a move all the way to 44. So this is a beautiful bottoming action right now, and you want to be long this market. Frankly, even now with a stop loss below the moving averages of 13 and 26, which is currently around 25, this is a great risk reward. Stop loss around 25 with upside all the way to 44. Momentum is very strong, creating positive divergence, and likely breaks out to the upside. Another area is Greece. I mean, Greece has been in a multi-year consolidation. And yes, there have been some strong waves up and down over the last couple of years, but this is a multi-year consolidation base, and it's about to break out to the upside. So break above 1050 and sayonara. I mean, Greece might be headed towards 13, possibly 16, and much higher, all the way to 20. So this is a market that I'm really watching, and I really like it. And this also goes to show you that you want to be in shipping. you want to be in energy because those two areas are a big part of the Greek economy. And I think you're going to see some tremendous gains. Those of you watching my premium videos on shipping already hopefully have experienced some of those really nice gains. Healthcare, another area that's really taken off. It's been weak over the last couple of years, but it's been just consolidating between 145 and 195. And now it looks like it's after 1, 2, 3, 4, 5, 6, 7 straight weeks. Now we might get a pullback or two, but bottom line is once this breaks above 195, sayonara. This is going much, much higher, and you just want to be long healthcare right now. Another area which has been really, really strong is Russia. I will point out, though, Russia is undergoing negative divergence right now. So a pullback in Russia is possible. So what's negative divergence here? 40, 55, 43.86 are 2 price points, right? We hit a higher high in price, but momentum here was lower than momentum here. So momentum is decelerating right now, which means if you're long this name, consider trimming some position. If you're not long this name, not a good time to go long. I want to either see it break above 44, which would be a great buy indicator, or I want to see it pull back, possibly as low as 37 before looking to enter in this position. Okay, a couple of names in the energy space, right? We've seen that crude oil has broken out, but this was pretty weak in energy ETF. So let's see what we can identify. Bottom line is, I'm really, really closely watching the sector. This is a sector that's going to see multi 100% gains in many, many names, but it has not yet broken out. So not yet. This is not a sign to go long, but when it breaks above $8, that's what I'm looking at. But look at this downtrend. Multiple points, that's 4 points, and it's very close to an upside breakout. And when that happens, that's my indicator to go long. These are the small caps, same sort of thing, just bottoming action, positive divergence, and we're consolidating here around that 38 level. So a break to the upside would be very bullish. On a price level, that's $8 to me. Natural gas, also 1, 2, 3, 4, 5, basically 6 times it's tested this downtrend line, and I think it's going to break to the upside this time around. But price has a lot ways to go. We're at 11 right now. I think we need to get past this 13 level for me to get bullish, but I think it's going to happen soon. And when it does, you're going to see a major bull run in the underlying equities. And oil services, same sort of thing. But notice here, this has already broken out, right? This is broken above this downtrend. Now it's back testing it. So something in oil services is telling me that this is of all the energy ETFs, this is the underlying sector that I want to be buying because it's going to be doing best because it's performing strongest now. Finally, oil and gas exploration. This has already broken this downtrend. So exploration and the services are the two areas in oil and energy that I want to be buying. So that means that we're going to be covering in the premium video later on this week. We're going to be looking at names in both of these sectors to see where some of the best opportunities lie. So that's it for me, guys. Let me know what you think, please. And always appreciate your feedback, both publicly and privately. And stay tuned for 3 to 4 premium videos to be posted later on this week in areas of precious metals, probably uranium, lithium, and perhaps another market such as oil and gas. So have a great week, and wishing you guys all the best. Take care.